Hello and welcome to the latest episode of Zach's Tech Talk Tuesday. My name is Ryan McQueeney and today we are going to be talking about a company called Overstock.com. And I think I'm actually going to call this episode something along the lines of the strange or mysterious case of Overstock.com. And for those that have been following this company for the past several years, that name, that title probably would make some sense. And if you don't know Overstock.com's pretty crazy story, I hope this episode gets you to an understanding of why the story of this tech company is so unique. It's not very often I just put one tech company in the spotlight on this show. So, it's enough content here to flesh out our normal, 10 to 15 minutes. So it's a pretty wild one. And I think to tell the whole thing, we got to start at the very beginning. So Overstock.com was founded in 1997 and then launched in 1999. And it was really one of the first wave of internet retailers / e-commerce platforms that offered a specific quote-unquote thing online. Now, let's think about 1999. There was a ton of websites cropping up in 1999. A lot of them were selling things online for the very first time. It really kind of sparked that .com bubble that we talk about so much in the investing community. Basically anything with a .com or web in the name could get some funding and get off the ground. People were really excited about this, specifically in retail, very excited about the concept of selling items online. And today we think about these e-commerce behemoths like Amazon and how we can get everything and anything online in one spot. But let's remember that even Amazon was just an online bookstore to start. And really, I think the trend in the late 90s and early 2000s was we were seeing internet retailers try to corner one type of market at a time. So what was Overstock's thing? Well, the name is actually pretty dead on. It sold exclusively surplus and returned merchandise. And remember that .com bubble? It actually started by liquidating the inventories of nearly 20 failed .com bubble era online retailers. So that's kind of what we're talking about here. They were famous for below average price items, and it kept that closeout pricing theme over the years, selling things like home decor, furniture, and bedding at below sticker prices. It did actually add new items over the years. It became much more of a one-stop shop type of Amazon competitor, but never really reached a point where I think someone like Amazon would have even been concerned about it. In fact, Overstock is still relatively pretty small, even dying fish in the e-commerce world. It generated just $1.8 billion in revenue over the past 12 months and has lost $250 million in that time span. Like many online sellers, its operating margins are razor thin. It has been just slightly profitable over the past decade or so. Amazon and even smaller players like Wayfair, which Wayfair still has some questions on its profitability to work out. Amazon, not incredibly profitable on the e-commerce side, but these companies and their product offerings, their shipping pledges, their memberships, whatever it may be, have really sucked the life out of the core business here from Overstock. There's just not, as much as there is room for a lot of e-commerce platforms, I don't think there's a ton of room for mega behemoths, one-stop shops, buy everywhere types of e-commerce companies. And, we saw a few kind of float to the top in the early days. Amazon was one of those. Now we're seeing a ton of traditional retail brands with really fleshed out online platforms doing really well for themselves as well. And I think that has created some losers like Overstock.com. But, that's not really a mysterious story. I alluded to something strange and mysterious here. And e-commerce company that's been around since the late 90s is kind of slowly fading out on the back of Amazon's dominance isn't really crazy. It's probably a story we can find several other examples of. So no, this takes a hard pivot here away from the e-commerce world and into the world of blockchain. Yes, we are talking blockchain again. It's been a while since we talked blockchain. It's actually even a cryptocurrency story as well in a few ways. And to start, this part of it, we need to fast forward from the creation of Overstock.com and to the year 2014. This is when Overstock.com became the first major retailer to start accepting Bitcoin as payments for its goods. Just a few months later, Overstock CEO Patrick Byrne did say that the percentage of revenue they were seeing from Bitcoin was less than 0.1%. It's actually a Reddit AMA. If you look it up, he was talking about this with some cryptocurrency enthusiasts, and he called it tiny in terms of how much they were pulling in from it. It did initially increase sales, substantially because of the excitement about it. And then it did end up kind of having an impact on the company's earnings at the end of the day. I think it finally found its level. And in 2014, about midway through that year, Overstock actually issued guidance that said Bitcoin would add 4 cents to its full year earnings per share figure. So, it didn't do nothing. It also wasn't a complete game changer. But the real thing that happened in 2014 that looks to be the game changer for Overstock.com was the launch of its blockchain subsidiary, Medici Ventures. This itself is an umbrella company focused on blockchain innovation, and it currently has ownership of or stakes of, and this is just by my count on their official website, 19 different companies in the blockchain space. They're all doing a little bit of everything in a little bit of every corner you can imagine blockchain tech as we know it today being applied. I'll just use their words themselves. This is from Medici's own website. It's a pretty long quote, but stay with me here. Medici says, quote, "We believe that by advancing blockchain technology, we can bring the people of the world closer together. By eliminating the need or trust institutions to stand between us, blockchain offers humanity the chance to re-engage and connect once again as people. Blockchain technology offers us the chance to replace fear, suspicion, deception, and fraud with trust, confidence, and the ability to connect and transact freely with all people." End quote. So a bit long, drawn out quote there, but that is one of the most enthusiastic pieces of support for blockchain in a kind of existential phrasing that you can give. If you talk to blockchain enthusiasts, not necessarily cryptocurrency traders or people who are specifically bullish on cryptos, even now, when we talk about people who really believe in what the blockchain technology that powers cryptocurrencies can do across many different industries and businesses, this is the type of answer they give you. It's this idea that it is a populist technology, if you will. It's something that can kind of return a certain amount of power to users and to average people. And I think one of the most kind of apparent or obvious ways to use that kind of concept in today's world is in the finance industry. And so one of the most notable of Overstock's Medici bets is called T0, and it is exactly that. It's a blockchain-based trading platform that, albeit has not launched commercially, but has a lot of people excited about the potential there. And as described in that manifesto, blockchain advocates really think this tech can work to solve problems in the finance industry. Some of those things like trust and fear and suspicion and deception and fraud. Those are all barriers to entry for regular people. They're real things that happen and exist and are problems. But I think more so than anything else, the possibility that those things might happen kind of keep people out of the ball game. And so bringing blockchain over into this world, into the trading business specifically, has people excited because it could potentially eliminate some of those fears and also lower costs and cut out other inefficiencies. So it definitely makes sense as an application. And T0 is a company that is looking to get in here on the ground floor of that. However, T0 is bleeding cash. And as CEO Patrick Byrne recently said, it was about $2 million a month that T0 is losing. That's the second time now I believe that I've mentioned CEO Patrick Byrne. Yes, I mentioned him earlier a couple seconds ago. We'll be talking about Byrne here again in a second. He's a key figure here and a really big blockchain advocate. So just remember that name. He is the current CEO, Patrick Byrne. I'll bring up his name again. Moving on here, though, Overstock in its blockchain exposure obviously got caught up in the blockchain buzz, the blockchain bubble, if you will, of late 2017. And if we will recall, this is when, and we talked about it several times on this very program, this is when everyone and their mother wanted to get rich on Bitcoin, and random companies were just throwing the word blockchain on the end of stuff. Notably, we saw a biotech diagnostics company changed its name to Riot Blockchain, and it became all the rage for about a month or two. We even saw Long Island Iced Tea Company change its name to Long Blockchain. That was one of the more wild versions of this trend. But to its credit, Overstock was not really one of these firms. Obviously the blockchain was not really a direct part of its core business. It had the Bitcoin accepting payments thing, but it wasn't really, this Medici thing was very separate from the e-commerce business. But, it had been doing that for several years. It wasn't one of these throw the blockchain on the name so we can ramp up the stock price here in late 2017. It had had some skin in this ballgame since 2014. So people went looking for companies with blockchain exposure, and Overstock was right there. Its stock skyrocketed. We saw the valuation obviously get a little bit out of control, as we did with many of these companies from the July 2017, which wasn't a low, just kind of when this started picking up from July 2017 to its peak on January 5th. Overstock.com shares skyrocketed more than 415%. And if you can believe, they've pulled basically all the way back down from there. So it's been a roller coaster ride over the past year or so for Overstock. And now we are kind of to the present day, and we're looking towards the future, and we're asking what's next for Overstock.com. Specifically, CEO Patrick Byrne is telling us what is next for the company. As I said, he is a huge blockchain believer, one of the more prominent figures, I think, in terms of businessmen advocating for blockchain technology right now. And he's also basically over this whole e-commerce business thing. He kind of wants out of it. I think he might be a little bit bored or something, and maybe doesn't see where the profitability is going to come from, and he wants to make a pivot. He's actually been pushing for the company to just outright ditch the retail business and focus solely on blockchain for some time now. Now it looks like we finally have a date, or at least a cutoff date. Byrne put a deadline on that goal in an interview last week with the Wall Street Journal, saying that he is aiming to divest the retail business by February 2019. That's just a couple months from now, folks. It's almost a new year, so that is definitely right around the corner. Things are moving fast here for Overstock.com. Wanted to pull this quote from the Wall Street Journal article. Byrne said, "Being the guy who pedals along and makes $10 to $20 million a year wasn't sustainable. We have maybe several multi-billion-dollar properties in the blockchain technology division," is what he was talking about there. This interview, I believe, was published Friday morning. Shares of Overstock.com skyrocketed 23% higher just on Friday alone. They fell down 16% on Monday, forfeiting almost all of that. It was like a little example of the blockchain buzz from last year, kind of playing out over 2 trading days, a little mini version of it. And I think, what happened on Friday, we're looking at, the possibility of a relatively big asset sale, which can be a positive for shareholders if executed correctly. Plus then, at this point, I think a lot of people are interested in Overstock as a blockchain play, and so they're looking at a company that's just purely a blockchain pure play that has presumably an advantage of just simply time and experience here, an advantage over the other companies that we've seen become pure play blockchain companies. And they're saying, well, that stock's worth more for me now that it's a pure play. And so that's probably what explained Friday's excitement. But, you get the whole weekend to think about it. Weekend, many people were home with their families, or maybe trying to escape that time with their families, doing a lot of thinking. And you realize we still have a ton of questions here. And investors don't really love uncertainty. Wall Street hates uncertainty. So we saw the stock pull back on Monday because of it. And what are those questions? I mean, let's just point out a few of the obvious ones. How many months, years, decades? That's obviously probably not true. But, how long away from profitability is the blockchain business? If T0 is bleeding $2 million a month, do we have any sort of revenue to come up to counteract that? Is there a blockchain subsidiary under the Medici Ventures umbrella that is closer to profitability? Are there any that are actually profitable right now? What kind of business are we looking at here? What's the balance sheet? How close are we to earnings, and when should we expect that? What types of risks are we talking about when we go to just blockchain? Looking at the retail business, how much would Overstock's retail business actually fetch on the open market? Is anyone going to be interested in buying it? Are they going to have to sell it? Are they going to sell the Overstock.com business and then become just Medici Ventures, change their ticker? I mean, there's a lot of, not that changing the ticker would really have an effect on the value of the company, but there's a lot of questions, a lot of uncertainty, and I think a lot of things that the Wall Street Journal interview maybe didn't answer. It raised a lot more questions than answers, and leaves us at an uncertain point. But we know Byrne is looking to make this happen here within the next couple months, and we know this means that the story is going to keep moving fast. So that is a brief history of Overstock.com, a company that was once a very interesting e-commerce. You call it even an e-commerce pioneer, if you will, in the late 90s. Slowly faded away into obscurity, if you will. Just doesn't really stick out as a huge e-commerce name these days, but is now a very popular, or a very interesting blockchain technology company, and could be a blockchain pure play very soon. That's going to do it for us today. If you feel that I missed something, any key details of the Overstock story that you think I missed, or if you want me to cover a different story, feel free to shoot me an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And please subscribe and leave us a rating on Apple Podcasts. It really helps the show. We're also available on SoundCloud, Stitcher, Spotify, wherever you get your podcasts from. We should be there. As always, thank you for tuning into the Zacks Tech Talk Tuesday show. We'll see you next time.